Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. We're talking to you today about a consumer staple stock that has a yield of over 3.7%. Guys, we asked the viewers, what stocks do you want us to analyze? This was one of the ones on the list, and boy, we cannot wait to talk to you about this consumer staple giant with some fantastic brands.
All about looking at dividend stocks, guys. Smash that subscribe button. Give us a nice thumbs up here on this channel. Takes 2 seconds. But man, Bert, pumped that you brought another consumer goods stock here to the table. You know, again, down in the last 52 weeks, but up this year, almost 5%. But hey, dividend yields approaching 4% here. A lot of popular brands that I could almost guarantee everybody has heard and or uses.
That's right. So in a second here, we're going to tell you this company, but we'll set the stage for this video. We're going to talk about the company. We'll go through its recent earnings release and some of the high-level metrics. We'll talk about the brands, and then we are going to run them through our Dividend Diplomats dividend stock screener, which focuses on what metrics, Lanny?
That price to earnings ratio less than the S&P 500, dividend payout ratio less than 60%, and a history and track record of growing dividends. And Bert, what an interesting quarterly earnings release this company had.
The company we're talking about today, they just went through a very confusing name change and a little bit of a split-off, spin-off. We're talking Kellanova, ticker symbol K, formerly Kellogg's. Yeah, they're like, we want to get into the future. So now we're Kellanova. Kellanova.
Guys, do you guys like the name Kellanova?
I'm going to be honest with you. I think it's stupid. But whether the name is great or it's dumb, we're going to take a look at the company and see if it's time to buy. You're right, Lanny. The earnings were interesting because the top line sales decreased 4.3% because they were divesting out of some Russian assets because of a few currency translation. But when you take the noise out, Kellanova actually had a 5% increase in organic sales, which is always a great sign for a consumer staple company.
Yeah. Yeah, and operating profit increased, this quarter by 13% year over year. And, when you exclude the market-to-market adjustment and some one-time charges, that operating profit increased 26% actually. So just keep that in mind. And adjusted EPS, guys, crushed it.
Yeah.
What was that beat on that?
It was $1.01 per share, beat the 85-cent consensus. It just didn't stop there, though. It trickled its way through to the cash flow statement as well. Net cash from operations was up to $364 million versus $276 in the previous period. And the free cash flow, $209 million for the quarter, up compared to $73 million in the same period last year. That's a massive increase for free cash flow. So the organic sales increased. Operating margin, operating profit increased. Earnings per share beat estimates. Cash flow up. Sounds like Kellanova is firing on all cylinders here, at least from the earnings release standpoint.
And the question is the stock price and the stock metrics also firing all cylinders for a stock to buy right now? And Bert, man, what's some strong brands here? You've got your Pop-Tarts, Toll House crackers, Rice Krispies, Eggo, Kashi cereal, Cheez-Its, you name it.
Yeah. Pure organic of some of the treats my daughters love here. Special K cereal, Nutri-Grain, all the great stuff. I think it's a very, very strong brand portfolio. And we were joking around about this before we started filming, Lanny. I just saw yesterday that Seinfeld produced a movie about Pop-Tarts, which I think is absolutely hilarious. You have a strong enough brand presence when there's at least a movie about a brand being created and somehow. I don't know what that necessarily means, but it's just interesting that there's a Netflix movie now about Pop-Tarts.
Hey, well, you throw Jerry Seinfeld's name, I'm sure you'll get some eyeballs on it, right?
Yeah, that's right. All right, really fast, everybody. We're going to do a quick power poll here for everybody after we ask Landy this question. Favorite flavor of Pop-Tarts, Landy?
Oof. I mean, you got to go with that brown sugar. I think brown sugar cinnamon or brown sugar, guys. If you know, you know. Let us know in the comments what your favorite Pop
Yeah.
Tart
I
flavor
always,
is.
I always love strawberry. I was boring for Trish, so let us know down there in the comment section what was your favorite flavor of Pop Tarts growing up, or it may still be your favorite Pop Tart right now.
Or what about diving into these Dividend Diplomat stock screening metrics, brother?
Yes, all right. That price to earnings ratio, their price at the time of this video is $60.51. Earnings per share are just under 375. So it's about 362 for EPS. P ratios 16.7.
Oof. Woo. That's pretty solid for a consumer goods stock. Diving into that dividend payout ratio, they pay an annual dividend here, guys, when you break it into 4 quarters, but right now it's 224. So just under 60 cents a share per quarter, 62% payout ratio. So at the higher side, but that's kind of what you see in a consumer goods stock. Not concerned, but as Bert goes into the dividend growth, that's where it could be impacted.
Yeah, and this is where it's really been lagging for Kellogg because they've had a tough few years and the split off didn't help. Even before the split off, their dividend growth was low. Their 5-year dividend growth rate's 1.43%. They've only been increasing a dividend for 1 year because as a part of this split off, as part of shedding WW Kellogg, which is its own company now, Kellogg's reduced its overall dividend that it's paying now. So they had a nice streak going into it, just 17, 18 years. The split off happened. They've started increasing one again. Call it what you want to. The dividend growth has been lagging in recent history for this strong consumer giant.
Yeah, and even when they were just one company called Kellogg, it was about 1 penny,
Yeah.
from 57, 58, 58, 59, 59 to 60, guys. So again, you're talking sub 2% growth for quite some time.
Yeah, and their yield 3.7%. It's just a hair above their 5-year average yield of 3.63%. So not really a screaming sign of undervaluation for looking at this metric.
Now, I mean, evaluating the stock, if you're a very conservative, you want low beta, you don't want something sexy, sure, this could be a stock for your portfolio, but if you want some dividend growth and possibly better than just a, small appreciation, you probably want to look elsewhere. I know I'm going to be looking elsewhere. I'm not adding Kellanova to my portfolio.
I agree. I'm passing on Kellanova here. I like Smuckers, which was my top stock pick yesterday. If I'm going to be looking at the consumer staples, it's hard for me to argue for Kellanova when you're staring a company like Smuckers in the face that has much better metrics and is trading at a lower valuation.
Guys, what about you? Do you own Kellanova stock? Let us know. And if you did own Kellogg stock, did you end up keeping your stock post the spinoff? Keep us posted in those comments, guys.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us. Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats, over and out.